Okay, I'm going to do something a little crazy today. I am going to do, my absolute worst bear case. Now, this is not as bearish as a couple of other folks out there, but I will tell you, it is really bearish where I'm concerned. This is Randy Kirk. I hope you like this content. If you do, you know how to hit the like button. And then we have some amazing shows coming up. You're going to want to hit subscribe and notify so that you'll be alerted to those. Or you can just look down below and you can see what's coming up, and maybe that'll encourage you to hit the notify button. And then finally, do join Patreon. It's a real help to me being able to afford to do the show. So, okay, let's get on to it. I'm going to provide first some earnings assumptions. My earnings assumptions are going to be somewhat negative. So, I know this is not the normal Randy, but well, I'll do my best. Okay, number one assumption, the economy does or does not move into a recession or something really slow in Q3 and Q4. Now, the bad news is that if it goes into a recession, that means that people will be less likely to buy cars. But the good news is if we go into recession, the Fed will stop raising rates and may even start lowering them, which would make people more able to afford cars and they would be more likely to buy cars. So what am I trying to say here? Overall, I think we're looking at maybe kind of a flat demand situation going into the end of this year. Does that mean flat demand for Tesla? No, because Tesla is moving down market. They are reducing their cost of goods. They're reducing their overhead. They're are now able to provide cars at a lower price point, even while maintaining really, really solid margins and maybe much better than we think. All right, so that's number one. I think that this will mean that as the stock, on the stock market side, that as we go into the end of the year, the market will start to anticipate a better market in 2024. And as they do that, the beginning of the new bull will happen sometime in the Q4, and that will help Tesla's stock. Usually it moves at around a 4 delta, but I'm anticipating that given the current circumstances, maybe it moves at more like a 2 to 3 delta as the market goes up. Okay, number two assumption. Tesla continues to evaluate the market. They'll adjust their prices as necessary in order to optimize their prices, their cost of goods sold, and their sales. Now, these are three moving targets, and you have to take that into consideration as you analyze their profits going forward, their sales going forward, the whole 9 yards. Yes, it is possible to not drop your prices, but to drop your production. That is a method that you can use. You can drop your margins and do some advertising. That's something that some people are suggesting that they do. You cannot drop your margins, but drop your sales, your production, and also start advertising. As you can see, there's all these moving things. Tesla's making a certain decision right now. Their decision is to maximize production, lower prices in order to move as much metal as they can. I think that'll continue to happen, and they should be really good at it because they've got the data. Number three, Tesla will not completely hobble their factories, but they might slow things down a bit. I know that doesn't sound like me, but as you'll see, I'm going to give you two different versions of my estimates. One will be the 2.2 million, which I still believe is not only possible, but likely. And the other will be the 2 million units per year, which would be what Tesla is calling their top hope, but which I consider to be the minimum they can even possibly do. And when you see the numbers, when I show it to you spread out, I think you'll agree with me that it's, unless they completely hobble the factories, they can't do less than 2 million. All right, number four, energy will move towards $1 billion a quarter toward the end of the year. We know that they're moving roughly 50% of the capacity of the new facility. And we know that they're going to put another facility in Shanghai. No revenue out of the Shanghai facility this year, but it'll continue to move up quarter by quarter. I think we'll see that there will be a $10 billion profit from energy storage in 2024. In 2023, you'll see I'll have it laid out for you, and I think it works out to closer to 1 billion this year, but the ramp will be very fast to $1 billion or $2 billion, $2.5 billion a quarter as you, well, I'm not going to show 2024, but that's what we're going to be looking at as we get fully ramped out. Number 5, some margin headwinds will diminish later this year. We're seeing raw materials prices come down, lithium prices come down, battery prices come down. All of those were headwinds. I think we'll begin to see maybe the dollar not being quite as strong, or certainly not as weak, maybe not returning back up towards being strong again, but let's say flattening out. So there's a bunch of headwinds that I don't think we'll be facing in the same way. Let's see. Also the other thing we'll see is the positive aspects of margins, like Model Ys are now going to dominate the sales. They won't just be substantially more than the rest. Now Model Y sales will dominate, and the Model Y sales have higher margins and higher price points, and lower costs, all of which will be contributing to better margins and overall better sales and profits. So that is going to be a very substantial improvement as we go through 2023 and through 2024 as well. All right, number 6, as Tesla moves down market, trying to attract more lower income buyers who can't afford to buy a Tesla, and with the IRA helping that out, the problem becomes it is slow to communicate to that group. Well, now it's slow to communicate everything. I was at a wedding the other day, my son's wedding the other day, talking to folks, and most of them didn't know that that very morning Starship had been launched. And these were middle-class kids. They were not, low information folks. These are people that read the paper. Well, they don't read the paper, but they read the news. They try to stay up on things. They didn't have a clue. Not everybody, some did, that Starship had launched that morning. So this kind of information about the lowering of the price points on the Tesla vehicles, it doesn't happen overnight. It's going to take a while to permeate through the crowd who didn't think they could afford it 6 months ago or a year ago, 2 years ago. The fact that they can't afford it will take a while from their friends, from their neighbors, from people that are more in the know, or from them just tripping across it. It's going to take a while to get that information downstream. All right, so, but it will happen. Tesla and Elon will have multiple massive headlines later this year, in particular with Starship and with Cybertruck. So these two will create headlines, will create a lot of activity in the course of the year, and those two things should help sales. Also, I'm suspecting that maybe we'll have some pretty good announcements on Optimus, but I'm an optimist. So therefore, I would obviously think that's going to happen. And maybe we'll have an announcement with regard to Gen 3 this year, probably in 2024. All right, and then finally, as I've said before, keep this in mind. As of now, Tesla gets no breaks from the street. Okay, we're in a risk-off environment. We're in a situation where Tesla has missed for a couple of quarters in a row, so Tesla gets no breaks. They are going to have to prove themselves quarter by quarter. That's the only way it's going to happen going forward. So just keep that in mind also. All right, now what we're going to want to do is we're going to take a look. We're going to share the screen here. And what you can see here is at the very top, I've got the total auto units. Then I have the average selling cost in dollars, and then the total revenues in billions, then your margins, total auto gross profit in billions, the energy profit, other profit, then total profits, overhead, GAAP, and EPS. And then I break down by factory. I prefer to break down by factory rather than model. That's just the way I do it. It's really easier for me to keep that in my head. So there are the 4 factories that will really have any consequence this year. Yes, Sparks is going to be starting maybe to build a few semi trucks, but I'm not going to include that in this particular analysis. All right, so for the first quarter is the one in column B there. That is showing exactly what did happen. You can take a look at those numbers as we compare them to what I'm saying is going to happen in the second, third, and fourth quarter. Now, this is my worst case. This is my bear case analysis. This is the analysis where we only sell, as you can see, 2 million cars. If you look all the way to the right there at the top, it says 2,003,000 cars. I just didn't want to, because never mind. Anyway, 2 million cars. I consider that to be worst case. I think you'll see what I'm talking about here in a second. Let's go down and take a look. So in Fremont, we go all the way down, we see Fremont sold 123,000 cars in the first quarter. I'm saying that that's the worst they can do. There was a few things that kept them from doing even more cars. The capacity for that factory is at 150,000. So I'm going to just really hobble it for the second quarter and say 135,000. The third quarter, 150,000, and the fourth quarter, 150,000. I think it will be up to capacity at that time will actually be more like 180, but they're going to just keep it around these numbers. That's my guess, unless the economy starts to go crazy. You can see what Troy Tesla's numbers are next to mine. For the second quarter, he's at 132, so I'm not very far off from what he's suggesting Fremont will do. All right, if you move on to Shanghai, Shanghai has the capacity to do 250,000 a quarter. I'm going to say they go from 209 to 215. Troy actually has them going down by 20,000. I mean, you would literally have to send people home. You would literally have to cut shifts to get down to his number. So I'm not sure where he's coming up with that. 215,000 is my number for the second quarter. 240 for the third quarter as we get closer to fully ramped, utilization of everything they've got, and then 250 again for the fourth quarter. Austin sat at 43,000 in the first quarter. Troy has them going to 51, which would only be an 8,000 increase, but they're increasing at the rate of 1,000 per week per month. So I don't know, 1,000, that'd be 4,000, 8,000, and then 12,000. I don't know. Anyway, I've even got a low number there. I'm saying 55,000. It's almost impossible unless they tell people to go slow. I'm just saying. And the same thing with Berlin. Unless they tell people to go slow, they can't go from just 43 to 65. Maybe it happens. I don't know. By the way, Troy agrees with me on the 65. He's got 51 for Austin. All right, but again, you'll see later, I have much higher numbers in terms of my 2.2 million analysis. All right, then in the third quarter, 60 and 70 for Austin and Berlin. Again, to only have 5,000 more out of Austin and 5,000 more out of Berlin is impossible, but there you go. In the fourth quarter, I'm suggesting that both Austin and Berlin jump up because the fourth quarter, typically Tesla and everybody else knows they're going to sell more cars in the fourth quarter. Now, lots of things could change between now and then. So I'm saying, okay, in the worst case analysis, they jump up to 90 and 100. You can see my totals. We have 558,000 out of Fremont, which is under the $600,000 suggested capacity, which is really probably more like 650. You can see 914 out of Shanghai, which is well under the million capacity. We see Austin at 248 and Berlin at 278. That doesn't add up to exactly the same 2 million and 3, but that's because of rounding errors. Okay, now if you take this and you put in, here's my other, if you go back up and you look at the average selling cost, you can see the 45,000. I know that was reported as closer to 47,000. There's leases. There's the credits that they get from these other car companies that have to pay them these credits. I think it's closer to 45,000 for the first quarter. I'm saying it goes up to 46,000 with more Model Ys and maybe a little better pricing going into the second quarter. Then 47,000 in the third quarter, 48,000 in the fourth quarter. Again, mostly this is generating way more Model Ys, which are at higher price points. Okay, then next you have the total auto revenue. That's just a multiplication. Then you have margins. Margins, I'm saying we're at 19 in first quarter. I'm saying they go up just a tad. Again, Model Ys increasing, 21 and 22 as the Model Ys increase and also costs decrease. So that gives an auto gross profit of 4.2 in the first, 4.3, then 5.1, 6.2, and of course 19.9 billion would be almost the total profit for the company, but that's not all of it because you have energy profit. So it was 0.2 in quarter one. I'm saying that's going to more than double in quarter two, and then slowly go up to 1 billion by the end of the year. It might happen faster. There's a lot of bookkeeping issues that might not align in time, but that's a total 2.4 billion for the year, which is not insignificant. Other profit was at 0.1. This would be for insurance, used car sales, supercharger stations, etc. I think that's going to go up fairly fast. So we'll go from 100 million to 200 million, 200 million, 300 million, for a total of 0.8 billion for the year. Total profit, you can see it. I don't need to speak them all out there, but it gives you a total of $23.1 billion in profit for the year, an overhead of 8.2 billion. I'm saying that the overhead slowly goes up because you've got more facilities and more people and more shifts and all the rest to take for overhead to take care of. And then you've got a gap. 14.69 is the worst case. 14.69 as the worst case. $4.39 a share as the worst case. I don't know, Wall Street seems like a pretty good deal to me in a recessionary year to hit 4.39 in a worst case scenario. Okay, quickly, let's go over my better case scenario, which, as you can see, has 2.158 million units sold for the year. In that particular case, I do have the total amount per car as about the same. I have the total margins at about the same. I didn't change that very much. So all of that was pretty much the same. I have the energy profits a little more. But when you add all that up with just a couple 100,000 more cars, now you're talking, if you go down, you'll see that the gap earnings there is 16.6, and the earnings per share is almost $5 a share. In that particular case, I think the key is to look down here and see that even in this case, even with only not just under 2.2 million, you still have 578,000, less than the 600,000 capacity. Shanghai still not reaching 1 million. Austin, Berlin at 297 and 334. I don't think those are unrealistic at all. And in fact, I believe if Tesla is full out, they make those easily. All right, tell me where I'm wrong. Show me the problems. I may have even made some math errors here. I usually do. I'm sorry, but it's just the way I am. But show me the math errors. Show me where I'm wrong. Show me where my assumptions are wrong. This is the perfect time to be able to jump in with your comments. They're usually the most valuable at this particular situation. So also like, also subscribe, also all those things. And then if this is useful to you, this will be up on in Patreon. This will be showing. So in fact, it already is showing because it's live. And so any Patreon member could have already seen me. They could have even watched me playing around with it if they wanted to, because it's a live, it is live, and literally you can go in and copy it, move it over to another place on the spreadsheet and create your own and manipulate the numbers if you choose. Anyway, lots of great programming coming up. Take a look down below to see what's coming up. And hey, it's been great talking to you.